Welcome back to Spotlight Business Report. When you hear the name Corning, you might think of Gorilla Glass on your smartphone or the Pyrex measuring cup in your kitchen. But today, we're going to tell you a different story. One about a 174-year-old manufacturer that has quietly become one of the most important companies in the artificial intelligence revolution. From fiber optics to solar wafers to the glass inside your Tesla, Corning is everywhere. And after a slow post-pandemic period, this company is roaring back. Their stock is up nearly 40% over the last 12 months. Wall Street is finally paying attention. So let's ask the question, is Corning a hidden gem, or are investors too late to the party? We'll break down the numbers, the strategy, and the risks right now on Spotlight. Corning Incorporated is based in Corning, New York, a small town that shares its name. But don't let the location fool you. This is a global technology giant with over 50,000 employees and more than $13 billion in annual revenue. The company operates in 4 major segments: display technologies, glass for TVs, laptops and monitors, optical communications, fiber optic cables and connectors, the backbone of the internet, specialty materials, Gorilla Glass for phones and automotive interiors, and environmental technologies, ceramic substrates for car exhaust filters. But here's what's changed. For years, Corning was viewed as a slow, cyclical industrial company. Flat-screen TV demand drove its stock. That was risky and boring. Now the narrative has flipped. Artificial intelligence data centers need massive amounts of fiber optics. Electric vehicles need lightweight, durable glass, and solar energy needs their silicon wafers. In short, Corning isn't just a glass company anymore. It's an infrastructure company for the next decade. Let's look at the scorecard. In their most recent fiscal year, Corning reported core sales of $13.9 billion, up 6% year over year. Core earnings per share hit $2.05, up 12%, and operating cash flow came in at over $2 billion. But the real story is the optical communications division. That segment grew by over 20% last year, driven entirely by AI data center buildouts. CEO Wendell Weeks put it bluntly on their last earnings call. Let's listen. Our optical products are now critical to every major hyperscale data center being built today. We are not just participating in AI, we are enabling it. That's not hype. Corning has publicly announced a multi-year, up to $6 billion agreement with Meta. And according to their latest 10K, they're in advanced discussions with 2 other hyperscalers, likely Amazon and Microsoft, for similar deals. Margins are also improving. Core operating margin hit 20%, a full 18 months ahead of their original target. So the numbers are solid, but what's actually driving this transformation under the hood? You've heard of NVIDIA, the chip maker at the center of AI, but chips are useless if they can't talk to each other fast. That's where Corning comes in. Inside an AI data center, you might have 10,000 or even 50,000 GPUs. They all need to share data at nearly the speed of light. Copper cables can't handle it. They overheat and lose signal. Fiber optics can. Corning produces a new type of fiber called ultra-low-loss fiber, plus specialized photonic connectors that reduce signal loss by more than half compared to standard industrial cables. This is not a commodity business. Corning holds over 1,500 active patents just in optical communications. Their closest competitor, Japan's Furukawa Electric, has admitted they are 2 to 3 years behind. Because of this lead, Corning is raising prices. In 2025, they increased optical fiber prices by 10%, and customers didn't push back. That tells you how critical they are. Analysts at Morgan Stanley recently wrote, and I quote, "Corning is the most overlooked beneficiary of the AI infrastructure cycle," end quote. But AI isn't the only growth driver. Let's touch on 3 other segments quickly. First, solar. Corning's solar wafer business grew 80% last year. U.S. solar manufacturing is booming thanks to the Inflation Reduction Act, and Corning is the only domestic supplier of certain polysilicon wafer standards. Second, automotive. Gorilla Glass is now in over 200 vehicle models, including every Ford F-150 Lightning and most electric SUVs from Hyundai and Kia. Why? EV batteries are heavy. Replacing traditional side window glass with thinner, stronger Gorilla Glass saves about 12 pounds per vehicle, which extends driving range. Third, display. TV glass is still a $3 billion business for Corning. It doesn't grow much, maybe 2% to 3% per year, but it's a cash cow. And that cash is being reinvested into optical communications and solar. So the old business funds the new business. That's a classic Warren Buffett-style capital allocation strategy, except Corning has been doing it for over a century. No investment story is complete without risks. Corning has three major ones. Risk 1, cyclical exposure. If the global economy slows down, TV sales and auto production will fall. That hits display and environmental tech. Risk 2, customer concentration. Apple represents roughly 15% of Corning's revenue through Gorilla Glass deals. Meta's new contract likely brings that concentration even higher. If either company designs around Corning, it's painful. Risk 3, Chinese competition. China's largest glassmaker, Xinyi Glass, is investing heavily in fiber optics and display glass. They aren't yet at Corning's quality level, but they are patient and supported by the Chinese government. Still, CEO Wendell Weeks addressed this head-on at the last shareholder meeting, saying, and I quote, "We have outlasted every low-cost competitor for 5 decades. This time is no different," end quote. So, where does that leave investors today? Corning trades at about 18 times forward earnings. That's not cheap for an industrial company. But for a company growing EPS at 12% to 15% annually with AI tailwinds, it's reasonable. The dividend is modest, around 2.1%, but they've raised it for 11 consecutive years. Here's my take. Corning is not a get-rich-quick stock. But for long-term investors looking for a company that combines 170 years of materials science with 21st century AI demand, it is one of the most defensible franchises in manufacturing. They own the bottleneck, and in the AI revolution, owning a bottleneck is a very good place to be. This has been Spotlight Business Report on Corning Incorporated. I'm Mia Rosewood. Thank you for watching.